In this video, I'm going to walk you through how to use key turns, specifically trading the Forex markets. And I'll walk through what key turns is here in a minute. Now, key turns is really the same no matter what you're trading it on. So that means whether you're trading it on the futures market, on stocks, on bonds, on ETFs, on any foreign exchange, or on Bitcoin, it's the same principles. So the principles apply no matter which market you're trading it on. It doesn't matter what time frame you're trading it on. All the same principles apply, and you're going to see me dive into that here today. I know there's a lot of Forex traders out there in the world, so we're going to talk a little bit about how to use this tool either as a standalone or in addition to what you're already doing. So this is really simple. I've pulled up some of the top currency pairs. I'm not a Forex trader. I've never been a Forex trader, but I'm going to dive into this. So I might not even get pips or whatever right, and I'm not going to worry about that. I'm going to talk to you about if we forgot about whatever was on the side over here. Really doesn't matter. What matters is what is the chart telling us and how does it relate to key turns. So let's start with the very basic fundamentals about key turns. Right here we have this red and green line. And this is very simple. These lines were the original key turns. It was the original, what was the companion piece to the direction of price indicator, which would tell us if the bias for the day was up or down. And then key turns was the exact price where the bias turns from up to down. And that's really that simple. So you had these two prices here. They're 1 pip apart. And here the bias is up and here the bias is down. Okay, and it's really that simple. At this pip it's up, at that pip it's down. Very simple. So above this green line, we're going to be looking for buying opportunities. Now, because we wanted more opportunities and more ways that we could interact with the market, we have added these two sort of extension prices. And these are really prices where the market becomes over, in this case, up above here starts to become overbought. Or if it were below our main key turn price, it would be where it's oversold. So for now, on this currency pair, we have these two other prices. They're treated the same as this price down here. And they're basically, the idea is really simple. Above here, we want to be long. And below here, we want to be short. So and then we treat these the same. Above here, we want to be long. And below here, we want to be short. Really that simple. Okay, so let's jump in here. So we have this is the most recent trading session. We're looking at a 10-minute chart on the Euro USD. I have 10-minute charts loaded on all of these charts. We'll go through. I might switch back and forth to a shorter time frame to show more detail of a particular move. So here I'm going to jump right into it. So here we have the open. It opens up. We don't even pop above this right here. We have 32.7, so 32.7. We don't even break this by a pip. We don't even come through this price by a pip right here. And then immediately sell off all the way from 32 down to 90 or down to 21. So there's about 11 pips on that trade right there. So there's 11 pips right out of the gate on the opening candle right here. There's 11 pips. Now we're looking for a move down to here. So what happens? This comes up here. We have, it pops up here, goes through this price by a pip. So we go 1 pip up above here. And then immediately, so what happened? We came up. If you wanted to switch and get long right here, then you're long. And then right here, you're short again. So the market comes up. And then the market comes back down here. And we came back down here. Then it came back up again. And then we got that follow through down to here. Now, one thing I should add, I'll put a link up here in the corner. There's a video that we did about the market is only ever doing these 4 things. And I'm not going to go through all of that again. So you might want to go watch that video and then come back and watch the rest of this one, because I'm going to talk about some of the principles from that video as we go through here. So here's what happened. We're looking to be short below here. So when it comes up above here, no problem, we can switch and get long, and then it came right back below it and we're switching and we're getting short. So then we're short from 32 and it came all the way back down here to 19. So we had another, let's see, how close were we here on this? So we came within, within a pip of, it was closer than that. And I really don't trade Forex, so I don't even know what the movement is that's smaller than a pip, but it was really close. So we came up here, this held within 1 pip, and then came down below here and started to move back up higher. So if we're short from here, we're short from 32 all the way down to 19. All right, so now that's a pretty nice move down there. And then we get the same move back up here. So what did we say on this one? I think we said about 11 pips on this move down here. And then we had the move from 32 down to 19. So that's going to be another 13 pips down to there, another 13 pips back up into here. And now we have what's going on here. We have 11 and then 26 pips between the two of these. We've got 37 pips here. And we're a few hours in, 4 hours in, 5 hours into the trading session here. Okay, so now here's our next opportunity. The market comes up here. We can try it short here if we want. And I'm actually going to switch this over. I'm going to look at a 1-minute chart because I really want to break down the movement for you of what happens around key turns. So let's go back here and look at how this played out. Switching back over to a 1-minute chart, here we have the movement down that happened. There was an opportunity to get long, and then that moved up to here. And now what do you notice that happened right here? None of these candles on the 1-minute chart could get below. We have this initial push up here, and then it came back down, and then look what happened. None of the candles could break this low right here, and none of them actually could close below the key turn price. We had one that closed at the key turn price, but none of them could close below the key turn price. So we want to be getting long in this area. And we have 32, the low right here was 30 basically. So we have about 2.5 pips or so from right here. That's about 2.5 pips that we're looking for we want to be getting long. There's a number of ways you could do this. You could get short below this if you wanted, but this is sort of a dead giveaway. And somewhere by over here, you really want to be getting long. All right, so we want to be getting long over here. We're getting long from this up to here. That's a 6-pip move, and so there's another 6 pips. Then we want to be getting short. It breaks out up above here. We want to get long up above here. We want to be long. So I want to be short here, long there. And now I'm long from 39 and I get 5 or so pips on that. It comes back down. It's playing around here. Now here's where what I was talking about in the other video starts to come into play. So a couple of things. I'm going to draw a trend line off of, or just a horizontal line off of the top of here. And then notice how I'd kind of pick out this area where the market had traded around. I'm just trying to see over here on the left of the chart. So there's some support. So I'm looking at, I want to be in, the theory is I want to be long up above here. So you can take that as literal as you want. And I want to be short below here. And you can take that as literal as you want. So how I would treat this is I'd be looking for, this is a general area of support. So you can literally go long at that pip and short at that one, and you can do that until it moves. And that's up to you if that's your trading style. What I'm looking for is I want to see, can they break back out above here and keep going? Otherwise, can they break below here and can I find a short entry? So they break out above here, and I've never looked at this chart until today, so I really have no idea what happens next, but they come back down here and then they start holding right here. And to me, that's a pretty good sign that I would want to get short. So there's some pretty good movement down here. I would want to get short. If they break back up above here, I'll reverse and get long, but I'm going to be short right here at that price. I'm still wanting to be short here unless they start to break. So here's a nice move. So I'm short from 39, and so far that's moved 5 pips. And then it comes back down to here, so I can be long right here, and then I can be short on the breakdown. So it breaks down, I'm getting short. And so on this trade right here, I was able to get 6 pips or so. I got long, I reversed that within a pip. There's a great opportunity. I can get short right here, and then I can watch for this to make another move lower as long as it's not breaking out. Okay, so it's starting to push up. Now I want to get long. So here's a little bit of a pullback. I can either get long here on a breakout, so I can put an order. I can put an order to get long up above here. So that's, you know, like a breakout order. So if it breaks out up above there, bam, I just get filled and now I'm long. Or it pulls back and I get long right there. And then that moves up into this area. So what happens? I want to be short here, but then it pulls back. I have an opportunity that I can get long. It doesn't go a lot, maybe 3 pips or something, and then starts coming back. But look, it holds right here at key turns. So I'm okay, it can be long here. It's holding up above here. And so this trade has now gone 11, 12, 13 pips up to that point on that trade. It came down here. I have the more times it comes back and tests the price, the less likely that price is to hold. So then I have an opportunity. I could get short on a breakdown. So I could see this right here. I could put an order to get short here on a breakdown. It breaks, I'm short, comes back up. I can get long out here on a breakout. And then that trade goes from 39 up to 47. So there's 8 pips. There's there's 9 pips. And then look, through here, it just depends on what you want to do. There's a number of ways you can do this. I'm going to dive into that a little bit more about if you want to trade away from key turns, how you can trade that. So what happens here? We start getting some consolidation in this area. One of the things I want to point out is this area right here. See how we came down here and then got some pretty significant buying. I am going to be cautiously shorting below here because we really need to come back and break this, and we need to come back and break that. So I'm going to be cautiously selling, and then we break out. You can be getting long right here. There's 39 up to 45 area, 49. There's 10 pips on that trade. And then this is, you know, just barely getting into the morning. So any of these pullbacks, I can be looking for, the one way I could trade is I can look for where are the areas of support and resistance, and I can be getting long and looking for a push up higher. Okay, so it comes back real close to the key turn level, and then it bounces, and then we get a break, and it comes back up. Now I'm watching this area because I marked that in earlier, so I'm watching that area. So they come down here, they're able to break and take that out. Remember, we're short from below here. They come down, they hold at this key turn area, it bounces about 5 pips, it comes back, it holds, it bounces 4 pips, they come back, they're holding, holding, they move back up into here. I mean, notice how it's trading in between the key turns here. And that's the end of the day, I believe. So there you have it. So it traded down in here, this held, and then it started to move back up some. Plenty of opportunity here during that day. Now, just to show that that's just the most recent day, I didn't go back through and look at any of the days, which I've done in previous days charts. So I went back and I looked at it. So here's a 10-minute chart. So here's the day before that. Here's April 9th. So what are we doing here? We're long. By the way, there's not always 3 prices. Sometimes there's 1, and sometimes there's 2, and sometimes there's 3. There are always 3 actually, and sometimes they're the same price. And that's just the way that the prices get calculated. So this is, let's see here. We're right in the middle here. There's really nothing to do. It pops up above here, comes back. There's an opportunity you can get long. That goes from 62 up to 79. About 15 pips, it comes down, it holds here, 62 down to 53, about 9 pips, comes back up, breaks out, holds here for a little bit, and it ends up breaking down. You're shorting the breakdown. That goes from 62 down to 45. We're getting long here. That doesn't work. We're shorting the breakdown. We're buying the breakout from 45. Back up into, we can try it short, and then we can buy the breakout. So you don't have to risk a lot on this. I mean, literally, you're short, doesn't work, reverse it, you're getting long. You're long above 62, and there's 89. So there's a 27-point trade. Sorry, it's 27 pip trade. I trade futures if you can hear the points. And so what happens? We come down, we break. You can get short down here on a breakdown. This goes from 62 down to 49, 13 pips. It breaks out. You can get long on a breakout. And this rallies from 62. This was not a price. And this thing goes from 62 all the way up to the high right here is nearly 100 pips. It's about a 90 pip rally off of that low right there. So if you got long above key turns, you got that 90 pip rally up to there. Okay, and then we're above key turns, so we can start buying any of the pullbacks. So anytime there's a pullback, and then I'll put another link to the video up here, which we just recorded about how to add to your winners. So you can go back and watch that about how to add to your winners. Let's look at the day before this, and then we're going to switch over to another pair. All right, so we're short below here. That ends up, we're long here, we're reversing short, and you just got to be flexible there. So there's 20 pips. There's a 20 pip trade to start the session out. Drops down here, comes up here, they start to break out. Oh, don't want to be in this one anymore. So now you're long on the breakout, comes back down, you're selling the breakdown. So now you're shorting the breakdown, comes down here. This is a big move all the way from 80 down to 30. That's 50 pips on that move down to there. You can short that, you can short that, and you're just taking your profits as it's going along. And remember, these are 10-minute candles, so there's 30 pips in 30 minutes, or 50 pips in 30 minutes. And then comes up here, it breaks out, comes back down, so they're holding here, then they break, they're holding, and then it breaks and it starts to move lower. Plenty of opportunity if you can be flexible. If you're very rigid in your thinking, it won't work. But if you're flexible, you can go, okay, up above here I want to be long, below here I want to be short. They're not breaking here. They're probing, but they're not breaking. I want to keep getting short. There's the move down. Up here, I'm long, so I'm short right here. I'm short, I'm short, I'm short. They start to break, great, I'll get long on a breakout. They come back, they can't break down. I still want to be long. They're not breaking. Great, they break down. Now I want to be short. Now they're not breaking out. Not breaking out, not breaking out. Comes back down, comes up. It's not breaking out. Starts dropping lower. Okay? And then in case, just for example, here's one day where the 784 to 925, 100 and something. I don't even want to do the math. 100, what is that? 130 pips. So you can see it works really well on that. Let's switch over to the USD JPY. Same thing. This was the most recent trading session, 10-minute chart. We're probing. Finally breaks out, comes back down. They hold it right here for a bit. It breaks. We want to get short. It comes back up, probes up above here. This is a fairly choppy market. This is the definition of choppy, is what I teach our traders. You have a low, and then you have a high. Well, you really have a high. And then you have another high, and then you have a lower low, and you have a lower high. So I'm guessing there was news on this candle. So you have a higher high and a higher low. That's choppy. So a lot of times you want to try and stay out of those choppy markets. Anyway, if you stick with it, and you eventually you're going to get short here, and that goes all the way from 51 all the way down to, well, you can see where that ended up closing out. That's on a slower, choppier day. The U.S. markets were closed. That was Friday. The U.S. markets were closed that day. Okay, so plenty of buying opportunity here. Buying, 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 buying. All this is buying. Okay, great. Now all this is selling and we're getting short here. So all this profit opportunity up here. And then we're getting short here from 90. And look at the sell off to end the day, all the way from 108.90 to 108.20. So 70 pips on a short to, and if you're following along what I taught in the video about how to add into your winners, then you're getting short and then you're adding on this bounce and then you're taking some off and you're getting short and you're taking some off and you're adding and you're taking some off and you're adding and you're taking some off and you're adding and you're, all the way down there. Let's look back over here. So here's another day. You're getting short. That's from 81. You can get long here to 61. There's 20 pips. It bounces off 61 up to 74. There's the 13 pip bounce. It comes down. It breaks. You can get short. It breaks 62. It goes 12 pips. It comes back up. It breaks. We get from 62 back up to here. Another 20 pips. So you can literally try these trades with a pip or so of risk. And when you're right, they're running 10. I don't think we've seen any really smaller than 10. 10, 15, 20, 30, 40, 50, 100 plus pips. And you can try it with a pip or two of risk. It's pretty incredible. Okay, here you go. You're getting, we're long on the pullback. Now we're getting short. There's the short from 10, and it drops all the way down to, that drops down to 67. So nearly, so 40 something points. Then it starts to put in higher lows and starts to rally back up here. We have another opportunity to short it again. That drops again, another 30 plus points. Yeah, nearly 40 points here again. Yeah, 40 points here again on that drop. And if you're following what I taught in the video about how to add into your winners, there's a lot of money in that trade. Here's your winner, another big winner on April 5th that pops up here, pops above it, comes back down. We're getting long here, 108.45, and that thing rallied up to the high here at 109.38, nearly 100 pips. Okay, let's jump over to the British pound, US dollar. This was Friday, slow markets closed. Anyway, you can see you can get short over here, you can get long over here. Comes up here, we hold here for a bit, we break below, we come back up, we hold here, there's your rally. Nice short opportunity right here. So it comes up, breaks up above here, you get long, breaks below here, you get short. Long, reverse it short, comes back up. Great, I want to get long. That thing bounces a bit, 12 pips or 13 pips, something like that. Holds here for a while, breaks, starts to move down. That fails, we're putting in higher lows. Comes back up to here. There's a great short opportunity. You can get long, or you could get long, and then you reverse it short. That moves down here. Another, what is that? 30 pips, 31 pips, something like that. Another great short opportunity, a great long opportunity. You can get short, you're reversing on the breakout, and then that runs all the way up from there. So you're long from 38, and that runs all the way up to 19, 20. So again, just that's a big run. There's an 80 pip trade on that one. We're getting short here on the breakdown. We're getting long on a breakout. We're selling all of this. We're buying right here. And then if you go short here, you want to buy the breakout. And just from here, from 40, we see the high up there. So this was 22.41, and the high up here is 23.84. So 140 pips on that trade. Anyway, you can see how accurate this is. I mean, we could go back and look at, you can see here's your price, it drops from there. So this is to give you a bias for what to be doing for the day. See how this holds up and we get all that bouncing. They probe it, they're trying to go lower, they just can't get it. It holds right there, comes back up, holds there, breaks out. So you can see, holds to the, I mean, barely pops above it. We get a huge drop off of that from 24.02 all the way down to 22.41. Huge selling opportunity. Huge buying opportunities over here on both of these for this big move up. Some short opportunities that don't go anywhere, but then a beautiful buying opportunity for a huge, here we go, 1869 all the way up to 2227. So if you trade Forex, you can do the math on what that looks like in your account. Here we probe, we get back up above it, we're long, huge rally up above it. We're short, huge drop below it. We're long for a bit, that's not working. We get short, it drops, comes back up and tests, we get short. I mean, you can see we're below here, comes back up, it tests, there's a big breakout, big run up. Right here, comes down, tests it exactly, bounces, comes back, below, tests, comes down. They can't get that follow through, they come back up. They come back up to here, test it exactly, come down. We're buying the breakout, big move up on the breakout. Then we have this price, and we kind of have, you know, I kind of keep an eye in between the two of these prices. So if we throw a fib in the middle of these, then we'll see where the 50%, that's the 50% mark. So I'm just watching, are they coming back down lower? What's that looking like? So here's a pretty good move, but then that holds at 50%, and we just kind of consolidate into the rest of the day. Nothing real big there that we're missing out on. So the idea is not to be in every trade. The idea is to be in the big winners. Again, buying, really nice opportunity here. Buying it makes a big rally and move higher. Before that, there was a really great short opportunity over here. And if you have some kind of another system that you're using to trade this with, like the box or something like that, then you could use that as well. And then we have, you know, we have this, we break above here, we break above here, and then we make a huge, huge push. Okay, so that's that pair. Here's the US dollar, Canadian. Again, that's Friday. It was extremely slow on Friday. Let's look at a more normal kind of movement during the day. They hold here, they come back and test, they make a move up, they come back and test. You can see the reaction off of it. They come back and test it, get a big drop, come back and test it, we get a big drop. Over here, we see they come up, they come back and test it. We're getting long right here. This rallies from 4002 all the way up to about 80 pips on that trade. They come back. We're trying it long. We're reversing short. It breaks a little bit. We're buying the breakout, and it rallies again 70 pips. So you're risking a pip or two down here, and you're getting 70 pips on the move up. And then here, they come down. We're trying it short. They can't hold below here. We're buying the breakout, and they rally another 75 pips before coming back down here to test it again. Okay, they come here, they break, they come back and test. We're long over here, they come back. We're now getting short, we're getting long here, we're getting short here, we're getting long here, we're reversing on the breakdown. You could get long up above here if you wanted, or you could wait until it gets back up above here. These are only about 10 pips apart, so just not that far. Yeah, what is that? Oh, maybe a little bit more than that. Yeah, 20, what is that, 20 pips? So these are about 20 pips apart. And so you can decide how you want to do that. You can get long up above here for a move to there and get short there, or you can get short here on the breakdown. See how it breaks and comes right back? We're short. This thing moves from 98 all the way down to 39.44. So 150 pip move on that trade. Here's a long opportunity. It fails up here. It comes back and breaks. We're getting short on the breakdown. Try it long, reverse. We're holding below here. And then we get a huge 42.13 down to 40.82. Huge trade. Hundreds of pips so far that we're pointing out on here. Anyway, that's that chart. Let's look at the, this is another chart now. So this is the USD CHF here, and we have, that's Friday. Again, kind of a weird day on Friday with the US markets closed. But here's Thursday, more normal kind of movement, little pop above here. We hold back below here, come back, we get long. we're getting short over here, it breaks, we're getting long, we're getting short, comes down, kind of holding in this area. Finally, we get this breakdown, start moving lower, that fails, getting long for the breakout, that goes, what is that, about 15-ish points, something like that, 14 points. We're getting short here from 97.22, and it goes all the way to 96.48, so nearly 130 pips on that one. Okay, so here's this, it breaks, we're getting short here, we're getting long on the breakout. So you sell it, you get long on the breakout. And then that runs from 97.01 all the way up to 97.43, so 41 pips or something. Then we have this failure, it's not moving higher, so they come back, they test, we're getting long, we're reversing it. That drops now about 32, 33 pips. Comes back up, plays around here for a little bit. It's really trying, can't really get below there. They try, and then they come back up, and then they end up holding it here. So we're getting long over here now for that move up. So if you're just smart about how you're managing your trades, and I've got lots of videos here on the YouTube channel about how you want to manage your open positions. So this is simple. We're just looking for short opportunities the whole time we're below this, and it falls hundreds of pips. We're looking for buy opportunities up above here. And, you know, that's a pretty slow day. So looking for buy opportunities up above here. Looking for buy opportunities above here. Looking for buy opportunities up above here. It goes from 96.60 all the way up to 97.50, nearly 100 pips, 90 pips on that trade. Here's a long opportunity from 96.20 all the way up to 96.88. So 60 plus pips. Here's a long opportunity. We're getting long up above here. Getting short right there. It's very short-lived. We break out. We get long on the breakout. It's off to the races. You're risking a few pips, and you're getting 30, 40, 50, 100 pips in some cases. We're getting long above here. We're getting short. We're buying the breakout. Pulls back. If you want to get short, fine. Get long when it breaks back out. You want to get short, fine. I would wait till it breaks down below there, but wait till, you know, get short over here, get long when it comes back up here. You're off to the races. It's 95.42, goes all the way up to 96.10. 60 whatever pips. And you can see we're looking for shorts. We're still looking for shorts. You could reverse long for a minute, then you're getting short again. Big sell off. We're looking for shorts. We're looking for shorts below here. Big, you know, hundreds of pips on that. Looking for shorts as long as we don't get up above here. They try a few times. They end up selling off at the end of the session there. And then this is the euro and the British pound. Again, that's Friday. It's really kind of a slow day. Here was Thursday. So how do you treat this? You're getting short right here. Then you're getting long. You're getting short. You're getting long. And, you know, kind of short-lived up above here. Pulls back. This is where what we talk about in the market only doing these four things really is helpful in a case like this. Anyway, it's chopping back and forth across here, and not all of these are trades you want to be in. So even if you're doing this, I mean, fine. If you want to get, you know, each side, I would personally wait for a breakout when you see this kind of movement happening. So we start to break up above here, and then really over here is where we start to get the breakout. So maybe we want to buy a breakout up above here, or you can try and, I mean, you can get long anywhere inside of any of this. You can get short here and long down in this range where it's holding up. And then you get that move up. Here's the pullback to here, get some good reaction. We break lower, come back up and test, and then we sell off. A little bit of a reaction here off the key turns, and then lower. Anyway, I don't want to. So I think, you know, you're kind of getting a good sense of, I'm just scrolling through some of the days so you can see how this plays out. Insane short opportunity here. 88.20 goes all the way down to 87.64. 56 points or pips, sorry. Look at this. Opens right here, drops below here, holds right here beautifully at 88.45, and drops the low of the day over here of the session 87.39. Over 200 pips if you just held that trade. And if you, again, are adding in and using the strategy that I've taught about how to add to your winners, that's a 300-400 pip trade. Okay, so here's great long opportunity, great short, another, you know, a long that fails, a short that makes a big run. So it's just a highly reactive prices here. You know, these are going to be very reactive. Here's a long, there's some shorts, we break, there's a long, consolidates in between here for a bit, breaks out above it, comes back, holding in this area, we come down, below here, comes back up and holds, comes down, breaks, come up here, we hold, and then it's moving lower, okay? And that's all that I had pulled up as far as these currencies. If there's something specific that you guys want to see or you have a question about, you know, you can see that if you're on the right side of key turns, then typically, I mean, if you're shorting up here, so look, we're shorting around 95.04 and it falls all the way down to 91.02. Huge trades here. So you're getting long up above here, huge rally. So what are we doing here? Failed breakout, comes lower. All right, we have tons of training videos that walk you through specifically how to use this, what kind of strategy, but there's got to be thousands of pips that we've pointed out here that were available just following the methodology, okay? So here's another one, comes right back. There's a big move, holding down in here, big move up. You know, these are not just random lines on a chart. They're, it's going to be extremely reactive prices. And it works on anything. It works on Forex, on futures, on stocks, on bonds, on mutual funds, on ETFs, anything you want to trade that you can put on a chart. Key turns will work on it. Works brilliantly on Bitcoin, Bitcoin futures. You can see this holds, gigantic rally, holds, big rally. Holds down here, big rally off of that. We have the selling happening here, big sell-off down there. So just some basic principles that go along with using the key turn levels. So there you have it. Hopefully that answers the questions of, does this work on Forex? Because as you can clearly see, it works great on Forex. You can check it out. You can go to daytradelikeapro.com/DOP. That's direction of price, DOP. Or you can just go to daytradelikeapro.com. And it's under tools for traders. It's under key turns. Okay, so hopefully that helps you get some profits in the bank this next week, and we will see you in the next video.